Welcome back, everybody. We are here with the Crypto Fat Cat. I am the Crypto Skeptic. It is the huge day, the day that the crypto enthusiasts have been looking forward to for, it seems, a long, long time now. Jonathan, tell us what is new in the crypto world.
Well, the crypto. We're so excited we can't speak, Sean. Back to you. The Bitcoin Exchange Traded Fund, the Bitcoin ETF, was authorized by the SEC, and not just one, but I believe all 13 applications were approved and began trading on Thursday morning at the bell. It was a monstrous day. Technically, 4.6 billion dollars of Bitcoin was purchased, but it's not exactly fair. It's really more like 2.4 billion. There was 2.2 that was in the GBTC Grayscale Fund, which just got turned into one of these ETFs. So we're not going to count that. But $2.4 billion of new money came in on the first day, which is by far a record for something like this. It's not close. I believe I was saying to you it was going to top $1 billion in the first day. It did way, way more than that. So it seems like it's a good start. It's not really about that. Like in the long term, I think in the long term, what this is about is the government of the United States legitimizing Bitcoin, at least, and probably to some degree with the coattail effect, to some degree like the rest of crypto too, Ethereum, some of the other ones, going to be much more legitimized in people's minds, and it's hard to take that back. So I think that is one of the key things. It doesn't just feel like fake money anymore to 90% of the world. You know, the people who are paying attention and see this, they have to take it a little more seriously.
I would agree. I mean, if we go back just even a couple years ago, it was something, crypto, Bitcoin in particular, was something that had these massive highs and these massive lows, super volatile. For the people who were enthusiastic about it, like yourself, the people in the crypto world, I know there's so many believers, so many people who really believed in the concept of Bitcoin and what it offered. Outside of that, I think there was widespread skepticism, misunderstanding, and it really was a world that wasn't easy for the average investor to get into. You had to sign up for Coinbase or Kraken or Binance or one of these different exchanges, FTX. And people who were just not in the crypto world would read about exchanges failing or being hacked and hundreds of millions of dollars crypto dollars being lost. And the whole thing just seemed really hard to wrap one's head around and to get involved in, unless you had the knowledge and the information and you were an insider like yourself. We've talked about in the past, a couple of times that I tried to sign up years ago when you were first talking about it, just out of curiosity. And I remember it was very difficult, and you had to register a credit card number, and you had a limit of, I think, 200 euros per day, because I was in Europe at the time, that you could invest. And it just seemed more trouble than it was worth, to be honest. And even in the past year, once the ETF rumblings seemed like they were legitimate, and they had a Blackstone, Mr. Fink, who was saying, that they wanted to go forward with this. And he was someone who was very much a skeptic. It seemed like, oh yeah, this really might happen. It might be a good idea to get some Bitcoin, even as just a speculative investment. And just going through the process of doing that, I found very, very difficult. It was hard to sign up. There was trust issues with signing up. Then there was like transferring over some money to my bank where they just wouldn't allow it, and they limited it. And, it was not easy. And to think that now you've got, people who are, have got their retirement fund in Fidelity, and they could put 1%, 2%, 5% into a crypto asset like Bitcoin. I really think that it's a game changer.
It does feel like a game changer. I will say it's BlackRock who, I think is the head of, not Blackstone. That's fine. You're going to mess some things up. Like you said, it probably wasn't even worth the trouble to buy Bitcoin back in 2016 or whenever you were trying. You're right then, you're right now. You got a perfect record of decisions and figuring stuff out. But I agree with you in all seriousness that it does just feel like the barriers to entry have fallen. And so it's an opportunity for even the dummies like yourself can now get involved with crypto. And it's not so hard anymore. And I don't know what to do. My head hurts. Anyone can do it. And it's not hard at all. It's a piece of cake. And you can buy and sell without any concerns about getting your money stolen or getting it lost or self-custodying it or any of those things that only big boys can do. I'm both agreeing with you really sincerely and attacking you at the same time in case it's a little unclear. Yeah.
Okay. Well, you have a serious case of hindsight bias here, because everything has turned up roses for you at the moment. But I would like to ask you to consider a couple of different things. One is you're someone who has, lost huge amounts of money in the Bitcoin bear markets. So if you go back in time, particularly after that first bull run that you were a part of, where you made lots and lots of money, then as you sat and you watched that go down 50, 60, 70, 80%, or maybe even more, it was a very difficult, very challenging time for you.
It was.
So now you're sitting back at the top or the near top, and you're feeling like just the cat who ate the cream. You're like, I am a genius. But you might be in the position that you were, so I'd encourage you to be humble, where once again you've lost 80, 90% of your net worth because you are so heavily invested in crypto, in the crypto world. Listen, you could say someone could throw a Hail Mary 60-yard pass, and they can make that place the Gerard Phelan flutie play, right? And you say oh my God, this is absolutely fantastic. What a great decision to do that. And in hindsight, it was a great decision. And it was the only choice they had at the end of a game to throw the Hail Mary. But the reason why they don't throw the Hail Mary regularly is because it's just a very low probability bet. And most of the time, you're going to get the ball intercepted or the ball's knocked down and you've wasted your down. So for people who are invested in crypto in a big way, I think a lot of them, I'm not saying this is necessarily true of you because, clearly you were the genius who foresaw this all was going to occur. But a lot of them were just throwing a Hail Mary. And the Hail Mary happens to right now be in the hands of the receiver who's falling down into the end zone. And so it's like, throw your hats off, jump up and down and cheer. But it was still something that was a very low probability bet. And that, as much as it's working out, and I think it looks like longer term that it's here to stay at this point with a decision like this. We'll talk about that. But nevertheless, there might be some very volatile waters ahead. And, I just want you to encourage you to be careful with how you're celebrating and how you're criticizing here, because you could be on the other end of this in a year's time.
People say to me, there's no way to know what the physical manifestation of sour grapes would look like or sound like. But I say no. I say we have examples of that in the world. And this is a perfect example. I will play this video for people when they say that. And they will say, sir, I was mistaken. You are correct that 2018, which was after my first crypto bull run, everyone remembers the 2017 massive Bitcoin, oh my God, $20,000 thing. And then it dropped all the way down to 3,000 or so. That was incredibly painful, very difficult. It was a tough year. It was a super tough year for me. It's true. However, since then, I've been doing great, even when the market hasn't, because I'm not afraid of choppy waters, baby. I'm all about that volatility. Volatility is what makes it's what makes price go up, as we say in Oregon. So, Sean, in the end, you're right that this stuff is the way it is. And I may not always be on top, as you like to say, but I would say we aren't anywhere close to the top, homie. This is base camp on Everest. We have multiple camps to build and ways to go. This is nothing compared to where we're going to be in the relatively near future. You thinking, oh, maybe I can finally figure out how to get some Bitcoin. You can do that. That's good.
I don't think I said it like that.
No, I'm pretty sure that's a verbatim retelling of it. You should do that now while you still can afford to, because shit's still relatively cheap. When Bitcoin hits 100,000, all you're going to be saying is, oh, I should have bought it at 44. I drink some more alcohol to chase away the pain. Like that's going to be you. And I don't want to see you like that because I know you. I don't want to see you turn into someone just like the functioning alcoholic that we all see is possible for you to become.
Thanks. That's super kind of you.
It's
Really,
rooted in careness.
you're showing a lot of caring here. A lot of caring. A lot of empathy. So you're saying we're at base camp.
Yeah.
What is that based on, and where is the middle of the mountain and the top of the mountain, if that's the case?
It's based on, as you know, Mister, I'm asking rhetorical questions. It's based on the fact that the Bitcoin halving is coming in about 3 months. Historically, that's the true beginning of the Bitcoin bull market. And I say this based on the last 3 times this has happened. So we only have 3 times. It's not set in stone. However, the amount of new Bitcoin that will be created every day will be cut in half. And so if there is the same amount of interest as there has been historically in Bitcoin, there's no reason to think it's suddenly going to dry up. If anything, you would think it would go up based on these ETFs. That would mean the price is ultimately going to be affected because there's less Bitcoin that would be coming out of the market. Supply goes down, demand remains the same or goes up. That pushes the price up. As the price goes up, people get excited about it. People start talking about it. The media starts writing about it. People get FOMO. There's a blow off top somewhere in the next year and a half, 2 years. This is what always happens. I expect it to be louder and bigger this year, not anything else, because we're better connected. We're better with social media than we used to be. And the numbers are going to be mind blowing. When Bitcoin hits $100,000, it's going to be a really big deal and everyone's going to know it. Everyone in the world who vaguely cares about this, even the tiniest bit, not Bitcoin, but cares about investments and money, is going to know that Bitcoin hits 100,000. And they're going to say, holy fucking shit, I didn't know, I can't believe this. What the hell happened? And it's going to force them to reevaluate their previous assumptions about Bitcoin first, and then ultimately other cryptos as well, namely Ethereum for sure, perhaps others down the line. So base camp is this. Camp 1 is like new all-time high, 70,000. Base camp 2 is 100,000, world going crazy. Camp 3 is $150,000. Oh my God, it's a true party. And I don't know if we go any higher this time. That may be the peak of Everest this time around, somewhere in that neighborhood. But maybe not. When gold did their ETF, it was 2 decades ago, I believe. And it was 2004, I think gold launched its ETF. And gold went on a 7-year bull run where its price quadrupled. Gold, however, had established 5,000 years of price discovery. So gold wasn't volatile like Bitcoin has been. Bitcoin hasn't even found its level yet, right? Bitcoin cuts its supply in half every 4 years too. So I think gold quadrupling, like Bitcoin, should do way better than quadrupling in the next 7 years because we're cutting the supply down. Because lots of people who might want access to it don't know how to have access to it. Because lots of people are still learning about it. There just hasn't been the kind of penetration that gold has had because it's been around forever. So I think there's no reason. There's lots of reasons. There's no really strong reason that outweighs this incredible opportunity that stands before us. So maybe that means I still think we're probably going to have a bull and bear cycle again as we've been having. I think that's most likely because that's the way it's been. Maybe I'm wrong. Maybe this will just be like gold and sort of go on a diagonal line up for the next 7 years. More likely than not, it'll pop and then drop back down as people are like, yeah, how useful is this really? And then it'll pop back up as we get close to the following halving. That's right, the 2028 halving. That's going to be a big deal. Bitcoin's going to be down to like $60,000 and you're going to be complaining about how can you even trust this thing? And so many people have lost money. Jonathan, I'm down $150,000 on this one Bitcoin that I bought because I bought at the very top because I waited like a chump. And now here I am. I'm going to sell at 60 because I don't trust it anymore. I just want to get out. And that'll be the absolute bottom. And then it'll rocket back up. These are the stages, man. These are the stages. Get ready for big stuff in the future too. $500,000 Bitcoin way down the line. Not impossible, you know?
Yeah. From everything that's happened so far, that seems to be accurate, that it's not impossible that there'd be $500,000 Bitcoin. So that is like your fantasy from, 5 years ago. It would be like, this is the best case scenario.
Oh, I mean, I remember when I was owning Bitcoin and watching videos about it like in 2017 as it was starting to go on its run. And it maybe hit like $8,000 or something. And that was so exciting. It was incredible. I had all this money that I had never had before, and I was thrilled. And I watched one of the crypto business guys, and they were interviewing him saying, like, how much do you think Bitcoin can eventually get to? And he said $250,000. I had never heard anyone say anything like that. And it seemed impossible and crazy. And like, that was the crazy outlier person, and now that feels like almost an inevitability to me. Eventually, I don't know when, but eventually it's 0 or 250. I don't think it stops before then. I think it's one or the other it's going to end up at, and maybe both, I guess. I guess it could be 250 and then 0, but I don't think it ends like and maybe not 0 really, of course. Maybe it's 10,000 or 250, like some significantly lower number than that. I think it's much more likely to hit 250 than it is to ever go back to $10,000. I got to say. Much more likely, like way more likely. Like, it's a very exciting time to be a crypto bro.
For sure. I mean, I think if it's going to hit 250, Jonathan, it's going to hit 1 million. It's going to hit 2 million. And it's just a question of how long until that happens.
Right.
If it happens, like if it's going to go this way, then, and if it stays as a long-term store of digital value, and that's how people see it, and it's the preeminent store of digital value, and people accept that, then unquestionably, it's just going to be more demand for it, and it's going to continue to, grow in value over time. However, you talked about your comfort with volatility and how even it excites you in the crypto world.
Yeah.
And volatility can be the investor's friend if you're investing in an asset that, has clear underlying value. So if you're investing in Meta, for example, 2 years ago or a year ago, when, due to the volatility in the tech sector at that time, and particularly with, we saw Netflix, we saw Meta, some of these companies that were just, throwing off so much cash, but still their value just plummeted in the short term. And if you were a clever investor, you took advantage of that volatility, you got into those companies, and then you wrote it up. But of course, volatility is not your friend if you're buying into something that ultimately is going to go out of business. So if you're in Toys R Us, one of the darling stocks of the 90s and early 2000s, and then you're riding that volatility, well, you rode it all the way into bankruptcy and you lost all your money. So, we don't see anything in front of us right now with Bitcoin. We've got this, $47,000 Bitcoin, $46,000 Bitcoin. We don't see anything in front of us that would lead to that going down significantly in the short term, right? However, it was only a couple years ago, we had this post-COVID situation where there was this, people fleeing from risk assets. And for a very short period of time, the stock market really was down, 30, 40%, 30% perhaps. And Bitcoin went down to $3,000. And that was great for you. But there could be something that happens in the future. It's always unknown. The last one was COVID. The major one before that, you could probably say in the Western world, in the United States, was the great financial crisis that affected the credit markets in 2007, 2008, where the stock market went back almost 50%, and people are going to flee risk assets during that time. So even if gold is, even if Bitcoin is a digital store of value, like it's very likely that there's going to be a run on all those type of assets, and people are going to need the cash in order to settle debt or just in order to keep themselves secure and safe or whatever it might be. So we don't know what's going to happen next year. We don't know what's going to happen with China and Taiwan. We don't know what's going to happen with Russia and Ukraine, et cetera, et cetera. Yes, it looks like a great time to invest in Bitcoin. But I think that you just have to have your eyes open that it could potentially be a much more volatile asset than you're presenting. And it might certainly not be an upward slope to $250,000. Is that something that you agree with? And is there something else that I haven't said that you think could also lead toward, huge volatility or a big drop in the price?
I think a lot of what you said was pretty dumb. I think you're basically saying, oh my God, there's risk in an investment. This investment is not okay because there's some risk. Every investment carries risk. So the question is not, does it have risk? I agree it has some risk. The question is, what is the risk adjusted return, right? What is the upside when we multiply that times what the risk would, if we quantify the risk, what would that be, right? How good is this risk adjusted return compared to other investments, right? How high is the upside? How dangerous is it? And so I think Bitcoin's not the kind of thing most people anyway should sink all of their fortune into. Some people maybe have more than others, admittedly, but that's probably not the right play for most people. Most people, you're right, can't stand the volatility, aren't built for it emotionally, and maybe also just money wise can't stand it, like need something a little more solid. But that doesn't mean you shouldn't own any Bitcoin, right? That just means it should be a small piece of your portfolio. But you get to capture the upside, and then the downside isn't so bad for you because it isn't your net worth that's dropping. All of your entire net worth is dropping by 40% when Bitcoin drops by 40%. It's 1% of your net worth dropped by 40%. So that means it's actually 0.4% of your net worth that dropped. And just for, this year. But actually you were up 4x on that anyway. So actually you're doing fine and you feel great about it. I think that's probably its proper standing in most portfolios is something small like that. 1%. It's going to be different for different people and their risk appetite. 1%, 5%, 10%, something like that. The more risk willing people, the more risk seeking people will have higher. In my portfolio, Bitcoin is literally 40% of my portfolio, give or take. Actual Bitcoin. Maybe it's like 42%, whatever. It's not small, right? But I am here for that. I'm here for the upside and willing to live through the downside times. And I have no problem doing that. Last year, actually, 2022, so a little more than a year ago, I guess, was by far the worst year I ever had financially by a mile and a half. I lost a shocking amount of money that I think for at least to what most people would consider to be a shocking amount of money. And what I would have considered to be a shocking amount of money. And, I just did fine with it because I'm on this train and I feel good about it. So yeah, there's risk. The question is there value in taking on that risk because the reward is so great when it comes in, right? I believe it is. And Toys R Us, which you referred to way back when, may have been a good investment. I don't know. I didn't look closely at it at the time. It failed. That doesn't mean it was a bad investment. Maybe it was a bad investment.
It was a great investment for maybe, 20 years. So
No. I mean, even at the time, after it fell and people tried to get in and then it didn't work out and it failed,
right.
It still could have been a good investment that just failed. You can buy a lottery ticket where there's only we have a 1 in 3 chance to win and it pays you $1 million, and 2/3 of the time you're going to lose your money. But that doesn't mean it wasn't a great thing and you do it every day if you could, right? It's a fabulous investment because your expected value is so high. So Bitcoin is one of the few things where we actually know what the supply is. We know what it's going to be. We know it's going to get lower and lower. We know what the penetration is in the world right now too. It's about 10% for crypto. That's crypto has touched 10% of the world. I mean, 90% of the world hasn't touched it yet. And of course, it's never going to get to 100, probably never going to get to 60, but 40? I believe in 40. I think 40% is completely reasonable. And maybe it ends up being a lot higher than that as cell phones become truly ubiquitous, which they mostly already have. But,
yeah.
Everywhere.
Pretty much are.
Because that's all you need to be able to trade crypto. And I don't mean trade you're a stock trader. I mean to transact in it. I can buy things with it from you, or we can trade different digital assets. So I welcome the risk personally. For people who have no stomach for risk, this maybe is the wrong investment. That's fair. But that doesn't mean to say you have to slap a huge warning on it, which the SEC, by the way, is also doing, and Elizabeth Warren does. And many people like yourself who spend a lot of time knitting more than anything else, mostly feel afraid about things, right? Sure, you want to make sure, hey, if you go in a car, you could get into a car accident and people die. More people die in car accidents than in any other vehicle, so you should just not get into a car, right? I say get in the car and be a little careful. Keep your eyes out. Try not to die. Everyone gets to do it, make their own decisions. It's an incredible opportunity. And we're going to look back, even at this time. I know this is true 4 years ago, but even now, I think we're going to look back at this as an incredible opportunity that maybe some people are going to get into and some people are going to miss. And of course, yes, this isn't financial advice. Yes, disclaimer. But it's an incredible opportunity, I believe. for me at least. Like, I believe in it.
Yeah, clearly, obviously. And then what you're doing, which I think really is very common in the world of crypto enthusiasts,
Yeah,
not
go
all of
on.
you, but I think many of you, like you're evangelizers and proselytizers, and you also are like very critical of people who are skeptical of it. And you use some straw man arguments there about like you're afraid to get in a car, you just like really go hyperbolic with it. And the truth is I am skeptical about it, but I've also spoken really positively about the
Yes.
short term and medium term possible, investment return investment, even that it could be a good investment short to medium term if you have a high risk appetite. And there's
Yeah.
a lot of people who are a lot more savvy than me, a lot more knowledgeable than me.
A lot. Yeah.
Hell of a lot, and a lot more than you too, and who have billions of dollars, who
Yeah.
more than you, who
Yeah.
are really super skeptical of the whole
Truth.
crypto experiment.
True.
So
one less than we used to, though. R.I.P. Charlie Munger.
oh, may he rest in peace.
Oh yeah.
So
He's a fighter, that guy.
You outlined that it is great. It's a great bet in your view.
Yeah.
Even if, like that lottery ticket, where if you can buy a lottery ticket and there's only two other people buying it and someone's going to win $1 million, yeah, the majority of the time you lose. But if you win so big that it's just worth going for it anyway. In that case, and how does that apply in your mind to the crypto market?
Well, the question really is, we threw on the number $250,000, right?
Right.
So let's say I'm going to pick a target. It's 2024 right now. Let's say $250,000 by the end of the decade. So sometime by the end of the decade, will Bitcoin hit $250,000? Would be, so not will it, but what percentage of the time do we think it happens? So we probably have different numbers, I would guess. Maybe not as different as we think, because you are secretly a little bit bullish on all this stuff. You secretly you sort of like believe in it now to some degree, at least, right? It's hard to really come up with any kind of reasonable number here because it's all speculation and guesswork. But I would say by the end of the decade, 250,000, maybe we could even lower it to 200. Let's call it 200,000. Make it a little easier to hit. I would say by the end of the decade, Bitcoin has hit $200,000. Yeah, like 75% of the time. What would you say, Crypto Skeptic? I should have let you go first. Go ahead.
Considering the size of the market and the fact that we've seen it bounce now a couple of times so significantly from, even just like I remember post-COVID, you talking to me about it having gone down to $3,000, and here we are at 47,000 just a few years later. And it's obviously bounced up to 70,000 before. So the whole thing about Bitcoin is the story behind it, and do people want it? Because they're not really using it to transact or buy goods or do anything super fancy and modern with it. They're basically just buying it to hold on to it and hoping that they make money on it.
Sure.
So 200,000, 6 years. Yeah, I would say more than half the time that is the outcome that we get.
Great. So let's call it for you 50%.
Yeah.
I know you said more than half. Let's be conservative and say 50%. And let me give you something else to chew on. The other half the time that it doesn't do it, it goes to zero. Let's just use those as our operating assumption.
Okay.
So I'm being, I think, extra conciliatory in terms of because that's not what happens most of the time. Even if it doesn't go to 200,000, it doesn't actually go to zero that often in the next 6 years. It's probably at some other number, right? It's probably at 15,000, 20,000. It might be at 100, might be at 170,000, right? Who knows?
Right.
But it could go to zero too. So I'm just going to say every time it doesn't, at 50% doesn't hit, I'm just going to say it went to zero instead. Okay.
Yeah.
So if that's the case, that means if we were to invest $10 in Bitcoin, let's call it $100. These are 2%. $100 in Bitcoin. Half the time it would be worth like 400 and change, right? $410. Yeah. And the other half the time it would be worth zero based on these generalized assumptions, right?
Yep.
Okay. So if you were then going to do an expected value calculation from that, what you do is you add those two numbers together, 0 and 415. You divide by 2, right? You divide by 0.5 because that's the percentage for each.
Yep.
You'd be at like $207, right, from our 100. So that means on average, assuming these numbers are right, by the way, these numbers I think are low. You said more than 50%, and the other number is 0, which it wouldn't be for sure, but fine. So on average, you're more than doubling your money. If even these watered down, sort of absurd numbers are even kind of right, like if they're like dragging that number down, and still you're more than doubling your money on average. So your expected value is really good. That doesn't mean go sink all your money in it, because that is still half the time, in theory, according to these assumptions anyway, it goes to 0. So that's not good, right? And but it does mean, holy shit, that's better than I'm going to do with any other investment I could make, expected value-wise, in the next 6 years, I think. I challenge you to come up with something else that you think is going to do better than, more than double by 2030, like as a sure thing. Not a sure thing's wrong. Its expected value is more, I should say.
So the rule of 7 says that if you get 10% return per year, compounded over 7 years, you'll double your money. So you'd have, you go from 100 to 200. You wouldn't be there at the end of the decade. It would be 2031, 1 year beyond that.
Oh, also you have to get 10% though. Where are you getting 10%? Are you getting 10% on your money every year? I think, isn't it 6% people are getting on their money? I feel like people are getting 6%, not 10%.
The average long-term return of the stock market is 9%.
So not 10%, but go on.
2, you're kind of nitpicking right now. I mean, you're sort of like, you're really grasping at straws, because you're faced with the fact
6% is really different than 10%, right? That would really change the how long that would take, would it not? Like tremendously so.
Yeah, but like I said, the average long-term return of the S&P 500 is 9%. So you're very close to that 10% number. A lot of people are aiming for 10% in their investment returns. It is a really solid, good return, but it's also not an outrageous return.
But you're talking about like it's an average return. I just feel like that is,
I think it
not
is
reasonable. But okay.
I mean, let me ask you this. What's your return in your stocks that you've had over the last decade or two?
I'm not sure, but really good.
Yeah.
Really good, yeah.
Right.
Quite excellent.
Your expected return case for Bitcoin, if it goes to $200,000, or if it goes to 0, doesn't really make a really strong case for why it's a can't miss bet.
It does, though, and here's why. Because you're accusing me of nitpicking when I went out of my way to pull down your greater than 50% number to 50% and make everything else 0, right? And like still it beats your S&P 500 in 7 years, which would be longer than our timeline. But number one. Number two, we both acknowledged the Bitcoin price could hit 200,000 sooner than the end of this timeline. This was just at some point in this timeline, right? So it could happen much sooner. By the way, it could happen in the next 2 years for sure. So you wouldn't have to wait as long. Number three, I mean, 10%, 6%, cool. Like the stock market has its own volatility, and there are some years where it's extraordinarily good, and other years where it's not, right? And sometimes it's more than just 1 year. Sometimes it's several. I just don't know how you're killing me for being nitpicky when I went out of my way to drag down the expected value of Bitcoin. Yeah, even when you take we give you everything, you still can't hit it. I don't know, man.
But okay. I think here's what we're comparing, though. It really is like, let's say if you say to an individual who's not in the crypto world, who's not somebody who's like super risky generally, but wants a good return, and you say, look, here's the deal. I want to present you with 2 possibilities. One is you put your retirement money in the S&P 500 and you just happen to get the average long-term returns. There's no guarantees of that, right? But let's say over the next 10-year period, you happen to get the average long-term returns of 9%. So then you're going to double your money in 7 to 8 years, let's say. But there's this other world where you could invest in Bitcoin. right? And I'm just going to present something to you because I have no idea what the actual value of Bitcoin is going to be, because it's
Yeah.
very hard to estimate what that is. We're basically looking backwards and seeing what's happened with these past few cycles, what's happened with these past halvings, but we don't have that much information. It's a little bit like, you're going to love this. You're not going to love this, but it's a little bit like if it's early in the basketball season and someone's shooting 45% from three, you're like, this guy's an incredible 3-point shooter. And likewise, if you get somebody who's, Jason Tatum, you're like, oh, he's only shooting, 29% from three in the first month and a half. And it's like, oh my God. But then at the end of the year, he's usually in the high 30s. And the guy who started off, who doesn't have a track record, is like going to settle back to. But so the long term, we do learn everything. And so you could say, hey, we've got this history of the S&P 500 that stretches back, to the early part of the last century or whatever it might be. And here's what we're seeing with that the long-term returns of this, and with Bitcoin, we really don't know. But we're going to present this scenario where it goes to 200 grand as being like a 50% possibility in, by the end of the decade, or that it goes to zero, because there is a world where that could possibly happen. I can't currently see what that world is. And if we do that, you could say you get a better return with the Bitcoin, but your average person is going to be like, well, I'm just going to go with the S&P 500. I would rather, if I have 100 grand, give me 240 in 10 years, rather than this unknown with the Bitcoin.
Okay. That's really fair. I can't even make fun of you for that. It's completely reasonable. I agree with you. The average person is going to say that. If you presented them with a more fair expected value calculation for the Bitcoin, which we did not do, we did a very unfair one for it, right? Again, we did 200,000 or nothing. It's an absurd thing. You would not actually do that, right? Like, if you're really doing it, you would say, all right, this percentage of the time it hits 200,000. This percentage of times it hits 150,000. This percentage of time it's at 100. And like the zero would be like 5%, and sub 20 would be 15%, maybe, sub 50 would be probably 25%, right? So it would drag that number up more. But the thing that would be important would be for not to say sink your entire net worth in one or the other. And then my argument would not be sink your entire net worth and look, you'll make a little bit more money on average with Bitcoin. I agree. That's a bad argument, because no one wants to take on all the extra risk for a little bit more money. That's a bad idea. But a fair argument, I think, would be put some of your money in the safe place, figure out how much money you want to, play around with a little bit here and take a bigger swing with, try and hit a few home runs, try and hit your home run with Bitcoin or other crypto ETFs, which are coming. Ethereum's coming next. There's going to be more. This is a whole beginning of a thing. This isn't the end of it. And because you're not really, because we did that calculation, but that was when Bitcoin actually hits the 200,000, you aren't doubling your money either, right? You're more than quadrupling your money, right? So really what we're talking about is taking bigger swings, and it gives you the opportunity to take a bigger swing with a piece of your portfolio. That's the way it mostly makes sense for people. I agree with you beyond that. Yes, of course you're right. Most people should not be as, hands and feet, all 10 toes on the ground the way I am with this stuff. I got my life set up a way that I can really do that, right? A lot of people don't. A lot of people have families and mortgages and kids, and you got to worry about things, and you can't you can't afford to have a bad year, right? Like, I can afford to have horrific years. So I'm willing to, because I believe in the upside so strongly, and that has really worked out for me thus far. So of course you're right. The safety is important, and people should make sure that they have a good chunk of their portfolio. The majority of their portfolio should be in safe places. There's no question about it.
Well, I think too, part of that is that a lot of us, just humans with our wetware, we underestimate the power of compound interest when you're just getting a half decent return. You're not knocking it out of the park. You're not 3xing it in 1 year. Yeah. But you're getting close to that 10% mark. And it's like, wow, over time, that is really transformative and life-changing if you can stay the course and stick with it. But it's hard to convince most people to sort of be able to think in those long-term numbers. Let's end with this. You're talking about taking big swings and knocking out of the park. Paint me a scenario where each Bitcoin is worth $1 million. And what would it take to get there? What would that look like as far as the market cap and the global economy? And what year could that happen if that was to occur?
Okay, it would have 150% of the current market cap of gold as a starting point. It'd be $21 trillion, give or take, right? If Bitcoin was at $1 million, just to give you a sense of it. So gold's market cap would no longer be this high most of the time. I assume it would eat a lot of gold's lunch to get there most of the time. I guess there are scenarios where that's not the case too, but they seem much less likely to me. So gold's market cap would no longer be 150%. It'd probably be like 3x gold's market cap or something. Gold would be down to like 7 trillion, something like that. But hard to really know. I think the way it happens is sovereign wealth. So sovereign wealth funds decide to seriously start banking Bitcoin. We've seen a little bit of this already. El Salvador is the best example. There are other countries that have gotten involved, but not very many yet. But as more major countries do, and we might start, like to get to 1 million, you're going to see G7 countries having Bitcoin as part of their reserves, I think, as a protectionary mechanism, especially the countries that don't control the money printer. So the US, that's less important than everybody else, right? Because they currently, anyway, have the global reserve currency. So they can just print out more money anytime they need. They're never really in debt. We act like we're in debt here in the US. We complain about it, but we can actually buy our way out of anything since we control the money printer. In fact, we do. We did in World War II. We're doing it again now. That's an incredible power to have. I don't know how much longer we're going to have that power, but I guess if the US loses that power, the US would be interested in Bitcoin too. But I could see European countries, for example, being very interested in stockpiling some Bitcoin so that way the monetary policy is under their control completely. Well, it's not really under their control, but they know what it is. It is controlled versus the United States has a new financial crisis this year, as it seems to every year, and they have to print up another $5 trillion because they decided to. And it debases all of the currency, and it makes everything you have worth less, right? All the money you've been storing and holding, all those dollars in the bank are suddenly worth less. You get less for them, and it makes your country less wealthy. So I think that is the primary way this really happens to $1 million. Maybe even Bitcoin becomes the global reserve currency. I think it's worth more than $1 million if it becomes the global reserve currency. By the way, I think that's an extremely unlikely event, to be clear. Even the pie in the sky hopium guy thinks that's not happening at any point. But I can see the arguments where it happens, right? The argument is we get off the dollar because people push back more and more from all the massive money printing that's been happening and probably will continue to happen. And when we're off the dollar, they have to pick a new global reserve currency, the world does, essentially. And no one's going to be able to agree because they saw what happened with America since Bretton Woods, excuse me. I lived on Bretton Road when I was a little kid. That's why I did that. But since Bretton Woods in 1940, 20, 30, I don't know. It was a long time.
1940.
1944, something like that?
Yeah.
Okay.
And toward the end of the war.
Yeah. All right. Whatever. So Bitcoin is the neutral currency in this case, right? The one that no one controls, the one that you can't print up more of no matter what, the one where when you have it, it retains or grows in value over time because it can't be debased. So that's the argument. I don't think it's happening. I think if it happens, we're looking at $5 million Bitcoin probably down the road eventually. But I don't think any of that's happening. I think even $1 million Bitcoin is, I think $1 million Bitcoin can happen, but I think we are miles from it. I think we're talking like 10 years, maybe more. Hard to say that. And then the world's changed so much. It's really hard to have a picture of what that looks like and how that could be. It's just hard to know. Like part of it is even understanding how big the bull market gets this time around, not this year, next year, I should say. Like if Bitcoin tops out at $125,000, that's really different than if it tops out at 300,000, right? If it tops out at 300,000, $1 million suddenly looks very much in play at some point in the near future. Near meaning the next 8 years. 125, it doesn't feel nearly as close. We didn't even double the last all-time high from 70. You start to think in diminishing returns from there. And then you're thinking like, does it ever hit 250? I hope so. Probably. Maybe. That becomes more like the goal. If it's 300 this time or 250 this time, now you can start to say, well, geez, at 3.5x off the all-time high. If next time it doubles the all-time high, now we're at 500,000, and then you can see how you could grow your way to a million at some point. It doesn't feel that crazy. Maybe it's 2040 when it hits a million, but that feels more reasonable. So a lot happens based on these next 2 years in terms of perception anyway.
Okay. Congratulations on the news and the validation from your pal, Gary Gensler at the SEC.
Yep.
I know you must be proud of him. Yep.
He's working hard for us.
Just think now that there's all this market acceptance and validation, might be the ideal time to get out.
I mean, there's definitely been a sell the news thing for sure. Like you and I both had talked about how we thought upon ETF approval, Bitcoin was going to shoot over 50,000, and it had no movement at all. If anything, it dropped a percentage point when all the other cryptos below it jumped significantly. Like the crypto market yesterday, which was the day it was approved, went up 4.6% and Bitcoin dropped a point. I mean, that is not what I expected. What it says to me is the ETF news was priced in already. It seems pretty clear. And now we're just waiting to see what the actual implications of an ETF really are, which is going to take some time. Like how much is actually going to be bought up. And if enough gets bought up, it'll force the price to move because it's a spot ETF and they have to back it with actual Bitcoin. So it's going to be the real numbers are going to be what moves it now, much more so than the froth. Apparently, I was expecting some froth, I will say. Not good at short-term predictions. I've learned that many times.
Okay. On that note, on a little bit of humility, I think we're going to just flag that, highlight that, short that. We will wrap it up for this time. And thanks, Jonathan. We'll see you next time.